The biggest caveat you didn't mention, though, that I would say is the one about inflation expectations. He basically said we are not going to allow tariff price increases to become broader inflation. That's on his watch. He believes that's in his control, and that would mean remaining relatively tight. So you're right, and I think what happened here, Frank, is he didn't really talk the market down, but he did tell them, listen, the data coming in September could be consequential. The market knows that. And so what'll happen, I think, Frank, is the Fed chair doesn't need to say it. But if the data come out as you described it and lean against that rate cut, then the market will adjust over time. But right now, I think that they see a go-ahead for, and let me just make one other comment here, which is that if there are price increases, they need to remain linked to the tariffs. When you start to see them bleed over into other areas, Austin Goolsbee, in an interview we did on Friday, a week ago, expressed concern that you had service inflation out there. If that becomes a problem, that's going to move the Fed further away from a rate cut. But right now, he's got, I don't know, a green light, sort of, but a dim green light, I'd say, on the way. Maybe the market was a little over its skis in terms of its exuberance, but it's hard to tell how worried they were going into it, Frank.
You know, Steve, that last word you said, kind of a dim green light, is very interesting. By the way, your ears must have been burning. I was talking about you earlier today on MSNBC, just talking about the fact that you said that Jay Powell, he may take a wait-and-see approach, something I described as owlish. So I'm going to give you that. You can use that going forward. Jay Powell had the chance to stop by you when he was walking by with some of the other central bankers and really clarify what he meant. But he didn't really do that. It was kind of short and sweet today. As we look forward, and we're going to talk to the traders about this, what's the next economic report that really matters to the Fed? Is it just the jobs report?
Well,
is it PPI? Is it CPI? Which one do you think is the most important one coming up?
Can I say it's not as much the report as the way the Fed, Frank, is thinking about reports. And we're all going to have a conversation, the traders and you and me and the Fed. Everybody's going to have the conversation about what the right level of payroll growth is here now that immigration has really come down to almost nothing. We're deporting people out of the country. The labor force is shrinking. You can do the math, Frank. You can find 30,000, 20,000 payroll growth and an unchanged unemployment rate. So I would say, to answer your question directly, that the answer is payroll growth, the September 9th payroll revisions for the prior year, as well as the inflation reports. But it's also a discussion and listening to the Fed about how they're rethinking what they call the break-even rate is. How much payroll growth do you need to keep the unemployment rate steady, which is a measure of how tight the job market is, which is a measure of the risk that a tight job market or not would lead to broader inflation. That's the discussion you have to have, not just the number.
All right, Steve, we got to leave the conversation there. We're going to get to the traders, but, you know, I could talk to you all day, Steve. Senior economics reporter Steve Leisman, live at Jackson Hole. Thank you, as always. Jim Lebenthal, you're champing at the bit. I know you're ready to get at this. You started nodding on the last thing he said.
Yeah.
What's the proper payroll growth considering some of the enforcement of immigration with this administration?
Right, because the chairman was very specific on this. And what he said was that labor demand has clearly softened, but there's this curious kind of balance. That was the key word, probably second to the, policy adjustment may be warranted line. This curious kind of balance between demand has softened, but labor supply has also softened. So that break-even rate of unemployment, he's not willing to say what it is. It's too moving of a target, and it's too unmeasurable. But what he did say, and I caught this right after the curious comment, is that downside risks may increase quickly. And for me, that was a moment where, looking at the markets, I saw the markets accelerate to the upside. It seemed to me that his verbiage, while measured, while balanced, definitely gave indication that the Fed is aware of the potential for the labor market to soften and for their focus to shift accordingly. Frankly, I saw this speech as very dovish, not very dovish, but much more dovish than I expected. I expected him to be a little stern based on where market assumptions were for a rate cut, and I'm not surprised that the odds of a September cut are now at 89% as I look at my screen right now.
Yeah, the word may in there, even Steve saying it was kind of a dim green light. I think a lot of people are trying to parse this. Investors aren't. We see the markets moving higher, but other people who are market participants are really trying to figure this one out. Jason, I want to bounce this off you from Ellen Zentner, the chief economic strategist for Morgan Stanley, says in part Labor market weakness appears to have outweighed inflation risk for the Fed, and the market's initial response speaks for itself. Longer term, the debate about how far and how fast the Fed will cut rates is just beginning. Do you agree with that? Today, we feel like we got everything under control, but there's a pretty good way to go, like 3 weeks left to go before that September meeting. And again, 3 very influential economic reports coming as well.
There's no doubt about it. Obviously, jobs are going to be a big number on the 5th of September, and then revisions after that. And then we'll obviously get PPI and CPI, which I think will be important. I think Leisman summed it up great with adjusting for policy stances. Obviously, the phrase that the market kind of anchored themselves to. But the other piece for me is what Powell mentioned is in terms of inflation. He said that inflation remains well anchored. So that is definitely, he's putting that aside. And I think even from a tariff perspective, he is mentioning that as almost a moment in time that we will move through, right? So I think that the market is, and we know that the jobs are lagging indicators. We know that we will see a lot of jobs data going forward, but I think that was a major point for me. The other thing I will say quickly, concern for me going forward, it relates to gross margins. I think we have heard from earnings reports, although earnings are really strong this quarter, that there are companies that are starting to talk about increasing prices, like the Home Depots, the Pepsis of the world. Walmart, so I think that is Walmart as well. So I think that is something to pay attention to as we move forward.
All right. Kev, what do you pay attention to? We're going to get to your moves later, but is this a green light? Is it a dim green light, a full green light in your mind to put money to work, to put money in the market in places where it may be higher beta, higher valuation? Do you feel confident making moves like that?
Clearly, the stock market's giving it a 100% chance of a Fed rate cut in September, regardless of what we're seeing on the CME number. And I think you made a great point, Jason, and this is probably the reason the markets are so excited, is that we're pivoting away from inflation that had been the major problem, the major talking point, to the labor market. So the notes that I took, and we all picked up on certain things that he said, but a reasonable base case is that the effects will be relatively short-lived and a one-time shift in price levels. Now, we've heard that several times before as being a possibility, but to see that in black and white or to hear it in the speech was the thing that I thought also was a catalyst for markets to move higher. So great day today, and I would expect a rate cut in September for sure.
All right, so you're expecting a rate cut. The market's clearly expecting a rate cut. Steve Weiss, what are your expectations? What did you make of what Jay Powell had to say? And the fact that our Steve Leisman said he sees a dim green light for that cut. The word may is in there. Even Jim, who said it was more dovish than he thought it was, or thought it would be, I should say, says like there's still some questions about what's going to happen going forward.
Yeah, well, first of all, May. I mean, of course they said May. When have you known the Fed to declare what they're going to do, particularly the Fed chairman, say, okay, definitely cuts. Of course he's going to say May. So I don't understand the debate on that. In terms of what the Fed's going to do, the Fed is going to cut. What the Fed has come to the realization is that they can't control inflation. Inflation they can normally control in most cycles because it's a factor of the overheating economy where demand is far outstripping supply. So it's simple economics. In this situation, they can't control it at all because it's inflation that's coming out of policy that's driving prices higher. So whether rates were at 10% or whether they were at 1%, inflation is going to run its course. And it's not just from tariffs, and that's the important thing. Tariffs are going to, of course, start the ball rolling, but it creates a pricing umbrella for everybody else to raise those levels. So if you've got to raise your aluminum prices by 40% because you import it, the domestic producers are going to raise it maybe 35%, maybe 30%. So, but it will be a one-time event, then we'll take it from there. They also really can't do much about employment because you've taken out a lot of the workforce through deportation, through those that aren't deported, that are hiding and not coming out to work. So you've got a tough labor force, and you're going to see wages grow up. So it's really stagflation. And what's kind of interesting about this is that it'll be the first time that the Fed is going to cut with stagflation so prominent without mentioning it. So I do think the Fed cuts. I do think that the market reaction is a little surprising in terms of the strength of it, because a lot of that was pulled forward. Now, it was a little bit offset as we saw the odds for a cut decline, as Steve mentioned, going into the speech. And that's the reason for the, I wouldn't call it correction, for the dip down over the last week in tech. So, yeah, so I think you can invest here, but I think you've got to be careful where you invest also.